Q3 was a pivotal quarter for Ring Energy, not only because of the financials, but also because the forced selling pressure from Warburg Pincus, their largest shareholder, it's finally gone. With that out of the way, today I'll break down the Q3 earnings results. Let's get started. Let's start off with Warburg Pincus, a private equity firm that owned around 20% of the company. They started selling when the price was around $2.50 back in July 2023 and continued to sell all the way down to around $76 per share. This has put huge amount of pressure on the stock price, but now they're done. According to management, they exited all their energy holdings, therefore it is not Ring Energy specific, which is a great thing to know for us investors. As you can see here, the stock price has bounced back quite a bit after they finished their selling, from around 76 cents per share to now around $1. Now on their production volume and proved reserve, in Q3 2025, they produced around 20,789 barrels of oil equivalent per day. 64% of it is oil, and the remaining 36% is made up of natural gas liquids and natural gas combined. Their current proved reserve is worth around $1.66 billion based on the 2024 numbers. This includes the pre-Lime Rock valuation of $1.5 billion and the $160 million added by Lime Rock acquisition. Just as a note, the oil and gas prices that were used to derive these numbers are $71.96 for oil for each barrel and $2.13 per MCF for natural gas. The average selling price across all the commodities was $41.10, which is around $1 lower than Q2 this year. They spent around $24.6 million on capital expenditure, and they made around $13.9 million in adjusted free cash flow. Right now, their debt is at around $428 million. They were able to pay off $20 million in debt in Q3 2025. Now, let's look at their adjusted free cash flow forecast. According to their model, they will make around $50 million to $65 million in free cash flow, depending on the WTI oil prices. So far this year, we have averaged around $66 in WTI, and it will most likely be around $60 until end of year. Therefore, the average should be around $65. Based on this, they will probably make close to $60 million in free cash flow. Now, in 2026, their forecast shows all the way from $30 million in annual adjusted free cash flow all the way up to like 95, depending on the oil prices. I think we will be somewhere around $60 to $65 in oil prices next year. Therefore, probably around $45 million to around $60 million in adjusted free cash flow. That wraps up Ring Energy's Q3 2025 earnings. Overall, I'm satisfied with their results. I'm glad that Warburg Pincus has finally sold out and the company is fully focused on improving its balance sheet and lowering leverage ratio right now. Depending on the oil price, it will probably take them 2 to 3 years to get the leverage ratio to their target of 1 or below. I believe this company is currently at what I call watch the paint dry stage. In other words, just sit and wait patiently and we will be rewarded greatly in the coming years. If you like this content, please give this video a like and don't forget to subscribe so you don't miss my future updates. Thank you for watching and I'll see you in the next one.